And you see this, Oliver Chen over at Cowen has a great quote this morning on the state of the consumer. And they go, I mean, I know you've darkened the door at Prada recently. People aren't doing that. They're buying lipstick and not a handbag. Is that what we're doing? We're sort of trading down our consumption to a soggy level?
Well, clearly the consumer spending numbers to start the year were disappointing, and they were disappointing especially relative to expectations because you headed into the year with job growth in Q4 exceeding 350,000 jobs a month, gasoline prices falling sharply, wealth
yeah, we're all going to spend money. We didn't.
Everybody was supposed to spend money, and they haven't. So I think it shows that maybe the consumer is more budget constrained, maybe they're more cautious, they're picking and choosing what they spend on.
Then state the case of the optimist. You and your colleague Ethan Harris have a positive view in the American economy. Mark Zandi at Moody's is ever more optimistic.
Right.
Even David Rosenberg, joining us in the next hour, is optimistic. How do we shift from buying lipstick and not a handbag out to a buoyant America where we're buying Prada and Bottega Veneta? I don't get it.
Yeah. Well,
Wait, who's we, Kiyosaki?
We, okay. I mean, the idea is, where's the verve? And the verve is coming, but I don't see it. Where's the verve?
Yeah, I think where you get a more positive story is simply looking at what's happening in the labor market. And you have an unemployment rate that's down to 5.4%. And maybe it's not the perfect measure of unemployment. It's probably not. And there's still underutilized workers. Yeah. There's discouraged workers. But you've seen a significant tightening in the labor market. And that by itself should generate stronger and more broad-based economic growth.
Michelle, we're going to get GDP numbers today. How do you account for first quarter growth? Usually you have to put a dampening function on it a little bit. What is your expectation?
So we're looking for minus 1.2% for Q1, which is obviously quite weak. It's not as bad as last year. We had minus 2.1% after all the revisions came in. But there's been a lot of talk and a lot of press we've written about, and a lot of our colleagues have as well, about the idea of residual seasonality for the first quarter, that there's issues in terms of how it's calculating. It's cutting
let me interrupt.
And the decision right now, if I want to make sure I understand this correctly, is, is there just a regularity to that, or has it been worse in the first quarter in recent years?
The past 5 years, we've noticed that it has been worse. That's post-crisis. So you want to take the Q1 numbers with a grain of salt. It's not the case that the economy
again, the vector's the issue, Brendan. You nailed this with the trend here. Yesterday, the call was negative 0.8. The Bloomberg terminal now is negative 0.9. And you're at negative 1. They're coming towards you.
Yeah,
I
evidently.
mean, the migration here is to a soggier outcome.
And I'm using your words. This is a lipstick mood, not a handbag mood.
It is a lipstick. Oliver Chen. I stole that from Oliver Chen at Cowen. Thank you, Oliver, for your great notes on the spirit of retail.